Hi, this is Joe Rabil with Invest Like a Pro. In today's video, I'm going to talk about a trade I did in Peleton, PTON. It's a good example of a trade where you can actually have pretty good technique and still lose money. So let's get into the charts. I just want to show you how I went about this trade, and then show basically what happened and where I kind of made a mistake. So let's look at the chart. On the right side, I've got a daily of the PTON, and on the left is an hourly. I'm going to zero in on a specific spot on the daily chart. Let me see if I can narrow this down just a little bit. So that's showing up, that circle showing up on the hourly. Now, as I've talked about in several videos, if you look at what I've taught in my book and a lot of videos that I've spent some time on, it's a two time frame approach, where the higher time frame I'm looking for some strength kind of coming out of maybe a consolidation area, and then it pulls back into support, usually defined by a rising 18 on whatever time frame that is. In this case, it's a rising daily 18. And once it gets down towards that daily chart, I'm going to flip over and look at the hourly. And so in this instance, what I'm looking for on an hourly chart is actually the opposing trend. So I'm actually going to move this out of the way now that we know where we're looking. And the opposing trend means the 18 crosses down below the 40, and we have kind of a downtrend developing on the shorter time frame. So I know I'm looking to get long on the higher time frame. And the lower time frame, which is what I'm looking for, is this opposing trend to tell me when this trend, which is going down right now, is starting to turn back up. I want to get back in, because I want to get back in the direction of the higher time frame. So that's the plan. The way you'd go about that, if you notice, when this thing dropped down and the 18 crossed down below the 40, one of the things I mention a lot is I'm looking for a move inside of the zone between the 18 and the 40, and then for it to come back out. And that would be classified as like a potential sell signal on this time frame, because we have a declining 18, which is below the 40, and that should be a negative, right? You come in the zone and then you come out, and when you come out, that would be viewed as a negative. Now, if you're looking at the price action, and I'm just going to draw in a trend line real quick, you will notice that the downtrend line that was in place was broken with the rally to the upside. And when you rally into the zone like that, in many cases, you're going to break the downtrend line. So it's something we really want to find. And then when you come back down and test the low, that's the 2 in a change in trend. So number 1 would be breaking the trend line. Number 2 is testing the low. And then when you come back up through this prior peak at this level, that would be 3. That would be the change of trend to the upside. Now, in this instance, the trade that I did, and I've mentioned in plenty of videos that I really like to get in earlier. I mean, I'd rather get in somewhere as it's turning up from the 2 level and not necessarily wait for 3. In this case, I actually saw this pattern trigger on the daily. I wasn't watching the hourly. I didn't have an alarm in. And so, unfortunately, I didn't really have a primo entry. My entry was a little bit more like up in here. So that's okay. I got in ahead of the 3. I mean, I'm still looking pretty good. When you look at the daily chart, I thought it was a pretty good pattern overall. When I enter like that, I go to the prior swing low as my stop, and I put the stop in below the low of that bottom. So in this case, I was risking, I don't know, it was a little less than $3, I think. And so that's a little more than I typically like to do for a stock that's this volatile, but this is a volatile name. So, but I think, if the entry was good and I was watching off the hourly, I probably could have been able to get it down to maybe $1.50 or $2. But in either case, I'm in this trade. And the way I look at it is, if I'm risking, I'm going to round off and say if I'm risking $3, when I'm up $3, then I'm going to start to move the stop up, or maybe cut the risk in half, or maybe take some profits and sort of say, you know what, I've got a decent trade in place. I don't want to take a full loss anymore. But that didn't happen here. I never reached the 1-to-1. And what happened, it rallied up and then it turned on a dime and it started to move down. And At this point here where we were breaking the 18 and breaking the 40 and we were breaking the prior low, this little low that was made right here, you have a decision to make. You can either take a small loss. So if I was risking $3, maybe I lose like 50 cents or 40 cents or something like that in this situation. And I know that the potential is that this could come down and not take out this low, but there is a risk that you're going to come down and take out this bottom. So I didn't like the way the price action was developing, and this was actually developing when the market was up that day. And so I was a little disturbed by that. So anyway, when I looked at all the evidence, I felt like I'm going to go ahead and cut this and take a small loss, and then I will watch it. And when it comes back up, I want to get back in if it sets up again. The problem was my organizational skills. Sometimes if I have a weakness, I would say it's my organizational skills. And the reason is I go through thousands and thousands of charts every week for clients and everything. And so it's very difficult sometimes to stay on top of former trades. And so this is one thing I would definitely emphasize. Make sure you have a working list and you stay on top of them. And make sure you have alarms in if you can do that with this system. Like TC2000 allows you to put alarms in. And I just didn't do it. I should have put an alarm in. As soon as I got stopped out of here, I should have put an alarm right back in to make sure that if it turned back up, I got in. Well, what ended up happening is instead of it going down and taking out the original loss, the original stop, it held above it and then it turned back up. So if I would have followed my original plan, it would have worked fine. I would have been totally fine. I would have had a lot of heat in the trade. I would have been in at 32.30 or something like that, or somewhere a little above 32, and I would have been down a couple dollars. And it's really not a comfortable thing for me. And so you just have to understand, if you're going to trade this way, if you're going to cut losses short and not follow your original plan, then you have to be organized and know that you got to get back in as this starts to reemerge again. I mean, there were some really good setups that took place, especially when you look at what was taking place in the hourly ADX. I mean, there were some very, very interesting patterns that developed that would have made sure that you got in 33, 33 and a half at the latest. So anyway, I thought this was a really good example of how you can get in using really good technique. But then you have to make a decision sometimes. Sometimes stock will not cooperate and just go and straight and hit targets right away. Sometimes it's going to come down and waffle around for a little while, and you have to have some patience, or you got to be organized. And so that would be my suggestion to you is you're not going to be able to avoid trades that move against you. So you just have to have a plan of how you want to handle them. And if it were me, I would try and be as consistent as I can with them. So if a stock is going to do something like this and it's not going to go hit the 1-to-1, make sure you have a plan if it turns down on you. If you want to do it, if you want to give them all room to the original stop, there's nothing wrong with that. But try and be consistent with it. Don't sometimes take it and sometimes not. There's nothing wrong with interpreting the evidence, but I think the more consistency you lend to your trading, the better off you're going to be. And that goes for profit taking as well. I'm going to show you some trades on the profit taking side and give you a lot of detail as to how I take profits and how I look at it. And I try and make it as systematic as possible. I don't want to ignore the technicals and the momentum and all that. I mean, I definitely want to look at it, but for the most part, I am trying to make the money management side, make a trading side in the management of a trade more of a mechanical system almost, or I like to call it more of a systematic way of taking profits when they're available to you. So anyway, I hope this was helpful. Please hit the subscribe button if you like these type of videos. I'm going to be doing a lot more of them. And if you can give me the like button, hit that like button. That'll really help the YouTube algorithm. All right. Thank you.